Well, good morning, afternoon, evening, depending on where you are on the planet. My name's Helen Brand. I'm the Chief Executive of ACCA, the Association of Chartered Certified Accountants, and I'm delighted to welcome you to today's discussion on public trust in tax, how to enhance the effectiveness, sustainability and fairness of global tax systems. This global event has been jointly organised by ACCA and our partners IFAC, the International Federation of Accountants, Chartered Accountants Australia and New Zealand, and in collaboration with the OECD. Before we get started, let me share some brief housekeeping guidance with you. You can start asking questions as soon as you like using the Slido link which you see on this screen. You can scan the QR code with your phone or click on the link of the YouTube page. Please note also that the webinar is being recorded and will be available post the event. So to say a very brief few words about ACCA, for those not familiar with us, we're the global body for professional accountants, representing a global community of 233,000 members and 536,000 future members across 178 countries. To come back to the focus of today's discussion, public trust is vital to the effectiveness and sustainability of any tax system. It's central to tax morale, which is the tendency for individuals and businesses to pay their tax voluntarily without intervention by tax authorities. I'm convinced that the willingness of individuals and businesses to voluntarily pay tax and their trust in the system can be improved through a better understanding of how tax systems can work for the benefit of all. We know that tax systems are designed by governments who want to maintain the confidence and support of their citizens. Understanding how the tax system is perceived and what taxpayers want from it is key to designing and operating systems which earn that trust. Addressing these concerns, IFAC, ACCA and Chartered Accountants Australia and New Zealand have run a series of online surveys between 2017 and 2021, seeking to understand public opinion on a range of tax matters. These surveys reflect the views of over 8,000 people across the G20 countries plus New Zealand, providing a real insight into who they trust and what concerns them, and providing a view of what the public, in other words, taxpayers and voters, actually think. We also organise joint regional roundtables with the OECD, bringing together policymakers and standard setters, business representatives, NGOs and academics, looking at the issues from an international policy perspective, as well as talking to experts from outside the G20 in Africa and Asia. Following all this research, we're now delighted to discuss with renowned experts the main findings of the 2021 edition of Public Trust in Tax, which analyses and explores the results of this extensive research and which launches today. You'll be able to download the report in scanning the QR code with your phone on this slide. This third edition of the Public Trust in Tax study citizens all over the world are re-evaluating their priorities as we live through one of the biggest shocks to society and economies in living memory. And it also follows the historic global agreement in July endorsed by G20 finance ministers and central bank governors, which aims to bring fairness and stability to the international corporate tax framework. Encouragingly, the first headline finding of the study is that trust in all key players in the tax system has improved, but there are still significant variations between regions. I'll come back to that in a moment. We also asked respondents which sectors of society and business were paying a reasonable amount of tax. While most respondents were likely to agree that their own tax burden is reasonable, a majority at all income levels felt that high-income individuals do not pay a reasonable amount of tax in their country. And while 33% believe that local companies pay a reasonable amount of tax, in 7 of the 20 countries, multinational corporations were thought to be paying too little tax. But despite this, 49% of people overall were still in favour of using tax incentives to attract multinational businesses. Also, and perhaps surprisingly, the survey discovered that in 15 of the 20 countries, support for international collaboration on tax has fallen, despite the historic advance in international tax cooperation I referred to a moment ago. Coming back to the trust issue, the survey uncovered varying levels of trust in global tax authorities and the players in the tax system. Trust in government's tax authorities is polarised, with 43% saying they have trust or a high level of trust in tax authorities, but 22% saying they distrust them. Overall, trust in government tax bodies has slightly increased. People's trust in media reports has improved, but the newly introduced category of social media is the second least trusted category. Despite a small increase in the level of trust this time, politicians remain the least trusted group at 22% net distrust. Professional tax accountants have the highest level of trust at 55% net positive trust, followed by professional tax lawyers with 50%. Accountants are also seen to contribute to the efficiency of the tax system by making them more efficient, effective, and fair. So as the chief executive of a global body for professional accountants, I'm proud to see the high levels of trust in them. This embodies the profession we know and love. But there's no room for complacency, and there's always more to do to sustain and strengthen that trust. The relationship between taxpayers and governments, and between businesses, society and tax systems, will be fundamental to the shape of economies that support us all over the coming years. Whatever the differences between the cultures that drive the divergent views about who is paying enough taxes or how the funds raised should be spent, the correlations between paying taxes and economic growth and social well-being are clear. Just as clear is the finding that people want to see the tax systems used to target specific positive outcomes. Our respondents, for example, strongly supported the use of tax incentives to support sectors affected by COVID-19. They were also very much in favour of similar tax breaks to support efforts to tackle global megatrends such as the fight against the climate crisis and efforts to support retirement savings. But here perhaps there is a risk of conflict with more directly involved stakeholders, many of whom have concerns about the distortions and economic inefficiencies introduced by discriminatory reliefs. All of this brings us back to the point about understanding how the system works. Many respondents stress the importance of financial education from an early age so that people understand the purpose of tax. This is why we will continue to engage with key stakeholders, including the younger generation, to support financial education and drive trust in tax and trust in the profession in the public interest. And this is what we're doing with you today with our distinguished speakers from the OECD, DG Taxud, Deloitte and Oxfam, led by our moderator, Stephanie Soong-Johnston, Chief Correspondent for Tax Notes Today International. But before passing the baton to Stephanie for our panel discussion, I'm delighted to introduce our keynote speaker, Member of the European Parliament, Paul Tang. Paul mainly works on economic and financial affairs with a focus on fair taxation and sustainable finance, and also the role of data in our society. Paul has been chair of FISC, the European Parliament Subcommittee on Taxation, since September 2020. Paul, thank you, and the floor is yours.
Thank you, Helen, for your kind introduction and for your invitation to this conference. I'm happy to address. Though when I got the invitation, I was slightly surprised because why would you ask a politician to speak about public trust, or to add to this, to ask a Dutch politician to speak about tax? because the survey is fascinating, right? I really studied the tables and I love this kind of work. But the result is also very clear. Politicians are not trusted on tax matters. And I'm pretty sure if in the expectations. So you are expected to do your job in service of your clients, and there's not the head of the public, and also in my mind. So often aggressive tax planning, allowing aggressive tax planning is justified by small governments as a way to attract investment, but there's a price to pay, and that is the feeling of inequality. In the sense, basic fairness is eroded. since we're not sure that everyone pays its fair share. So the social contract on taxes is vulnerable, and to strengthen it, I think indeed transparency is key. We need to show what is going on. We need to show, and especially that starts with large corporates that have been at the forefront in publicity, need to show that they indeed pay their taxes. So that's why we welcome the public country-by-country reporting. And I was glad to see that in a recent hearing of the FIS committee, I was able to invite Shell, the oil company, because Shell used to be in my days in Dutch politics one of my opponents, which I challenged to tell how much taxes do you pay in the Netherlands. And in fact, they've in that sense come clean, and they are now one of the front runners to embrace public country-by-country reporting. And I was happy to invite Shell to the FIS committee in the European Parliament to tell about the experience, the discussions they had that made them arrive at public country-by-country reporting. And this shows, like I said, it's a broader change. Private actors cannot go against the public good. You see a shift in doing business away from profits, from shareholders, to people and planet, to stakeholders. And this broader change will change the public discussion on corporates, financial institutions, but in the end also on tax accountants. Expectation change. Like I said, high expectations are also a burden, but I very much hope that you will see even higher expectations on tax accountants and tax advisors. I think that will come. I wanted to change also, let's be clear on this. I think tax accountants, tax advisors, and others, tax lawyers you mentioned, Helen, have a crucial role to play, as you say, at an efficient and fair tax system. And part of this is up to the accountants themselves. It's say no when it doesn't seem right, when a client asks you to do what the client shouldn't ask, please say no. And partly this is of course up to governments and to politicians. Because I've done some research showing that European countries where tax advice is not regulated at all, let's say the liberal ones, including my own country, the Netherlands, there's 8 more tax avoidance than in countries with regulation. Right, so that shows that tax accountancy, tax advisors may benefit from tax regulation, the wheat from the chaff, but it also helps to strengthen their role in society. You can imagine the reason, of course, that tax advisors have to balance the private interests of their clients to minimize the tax bill with the public interest in need of a fair and efficient tax system. They are sometimes squeezed. And such a regulation can look similar in a sense how we started with bank regulation. I remember that there was a long discussion on the bankers' code and an oath done by bankers. And I think that was a start of changes, not just in regulation, but also in the culture in the banking sector. It's a start, doesn't end, but I think that tax advisors should also commit to a fair representations of company businesses and enter into discussions with the client if they see that the effective tax rate would become excessively low. And such regulation would codify the expectations of the tax intermediaries needs. The role cannot be just focused on profits and on shareholders. It's not about minimizing the tax bill of your clients. Taxation is an important part in our society, an important part of our government and welfare state, and is an integral part of our well-functioning economy. And indeed is essential also not just to deliver fairness, but also sustainability. And if we have reasonable expectations of the advisors, only then we can have reasonable measurement of trust in their activities. So I think that's my message. Our social contract in taxation is under pressure. And I, as a politician, but also you, have a role in to re-establish some of the basic pillars in our tax system. And we need to act tax avoidance by the rich and the multinationals. That's a common agenda in the FIS committee of the European Parliament. And we need to use taxation as a way to reduce inequality and promote sustainability. So let's be clear, when it comes to taxation, the status quo as it is right now is not sustainable. We see more emphasis on people and planet, and you believe me, you can trust me on this one. Thank you.
Thank you so much, Paul, for that great speech. And you are right, change is on the horizon, and we all have our roles to play. As a journalist, I was actually surprised that the trust in media was actually up in that survey. So, you know, we are always held to task for our work as well. So I'm very acutely aware of the importance of public trust in tax as well. And so with that, I would like to introduce my panelists. So each of them represent organizations that play vital roles in the tax system and building that public trust that we're talking about today. We have today Grace Perez-Navarro. She's Deputy Director of the OECD's Center for Tax Policy Administration. Reinhard Biebel, Head of Unit for the Direct Tax Policy and Cooperation Division at DG TaxSud at the European Commission. I have Chiara Putaturo. She is the EU Inequality and Tax Policy Advisor for Oxfam's EU office. And I have Albert Baker, Global Leader of Tax Policy at Deloitte. Welcome, everybody. Let me just start things off with Grace. I'll go over to you. I wanted to get your opinion about what is happening with public trust and how the OECD plays a role in that.
Thanks very much, Stephanie, and big thanks to both Helen and to Paul for really setting the scene here on this issue. As you know, the OECD has been working on the issue of tax morale for several years now and trying to raise the visibility of this issue. So we're very happy to see so many people getting involved in this issue. And we're very happy to see the results of this survey. It was interesting, I thought, a little disappointing to see the drop in support for international cooperation on tax, but what we see on the ground in our meetings, both in the Global Forum on Transparency with over 160 member country and jurisdictions, and in our inclusive framework on BEPS with 140 countries, we see that there is very strong interest in international cooperation in the public as well as in these governments. And you can see from the recent historic agreement this summer by 134 countries and jurisdictions on a two-pillar solution to the tax challenges of the digital economy that there is a lot of interest in international cooperation. So we'll have to look deeper into why the survey came out that way. We were happy to see that there was a strong increase in trust in tax authorities. This, as Helen said, is really vital, and our tax morale research has shown that the perception of the tax authority is the most important factor in influencing tax morale, that is, the behaviors of taxpayers. And so it's quite important and quite positive that there's an increase in trust in tax authorities. This, we believe, has to be a priority of all governments, because all governments can improve in this area to restore and increase trust. We've seen in the survey as well that there's an increased satisfaction with digital online tax administration. This does suggest that there's a clear role for digitalization in building trust, as well as enhancing the efficiency and effectiveness of tax administration. You know, this is an important part of service, and service is a big part of a tax administration's role. There was one IRS commissioner who used to say, service plus enforcement equals compliance. I think it also helps build trust doing both of those things. As Paul said, it's important to fight tax evasion and avoidance push that compliance component, but it is equally critical to provide service to all taxpayers to make it easy to comply. Our FTA is working currently on a report to help developing countries in their digitalization efforts, recognizing the different starting points that they have and the capacities they have, because we think that this will help increase compliance, increase trust in the tax administration, and help them collect the revenues that they need. There was a lot in the survey about tax incentives, and especially in the context of COVID, we saw a lot of different tax incentives, and I think the question is, the appropriateness of tax incentives, and Helen mentioned a few of the challenges with tax incentives. On the one hand, countries want to attract investment, and politicians love to do that, investment authorities love to do that, but does that produce fair outcomes? What is the impact on revenues? Do the incentives really attract business that otherwise would not have gone to that jurisdiction? These are important questions to consider whenever you're talking about incentives. So it's not to say that there shouldn't be any incentives. We know that targeted incentives can be good, but for the most part, incentives don't often do what they are intended to do. So that's why we see things like all the support for a global minimum tax in our digital project, the work we've done on harmful tax practices, getting rid of harmful preferential regimes. All of that is an indication that they're not always good. Paul did mention the issue of professionals like accountants and others, and Stephanie, that we released in February the report on professional enablers, which talks about those professionals, accountants, lawyers, etc., who facilitate tax crimes and other white-collar crimes by individuals or companies. Now, the vast majority of accountants and lawyers, etc., are trying to help their clients comply with the law. And that is good and that is important. But we also need to ensure that professional associations such as the ACCA and local professional organizations play a role in ensuring that these professions remain professional and continue to support taxpayers in complying with the law, not in violating the law. So that I was very happy to see Paul put a big emphasis on, because you have the taxpayer on the one hand, you have the tax authority on the other, but then you have these intermediaries that play a big role, and they can play a positive one or a negative one. The other thing that I want to highlight in our work is that I think Helen mentioned the regional consultations we've had with business to try to get a better handle on this whole issue of tax morale in the business context, because very often it is not a question of legal or illegal activity. Big multinationals will always have advisors to help them plan their activities. The question is, how close to the gray areas do they get? And our work in this area has been very interesting in that we've seen that outside of the OECD area, less than half of tax officials think that most large multinationals are open and transparent with their revenue authorities, or that most of the information provided by large multinationals can be trusted. So through our series of roundtables with business and tax officials, we've tried to identify different avenues that can be taken to improve those perceptions on both sides. And we hope to publish a report at the end of the year on that. So maybe I will stop there and just say that I do think this is an important discussion. I do think that Paul and Helen highlighted many important areas that we need to pursue in the tax morale area, like financial education, et cetera. And we need to raise awareness on all fronts of the importance of this issue. Thank you.
Microphone.
Stephanie, you're on mute.
Sorry about that. You think I was just saying that we are all here on we're on this virtual format still because we're still dealing with the pandemic, and I still cannot figure out how to use the mute button. So I'm really sorry about that. One quick question for you, Grace, is follow up. You briefly touched on COVID-19 and how this affected global tax policy landscape. Could you please talk about a little bit more about that, and by extension, how is that have a bearing on public trust?
Yeah, thanks, Stephanie. Well, the pandemic really showed the importance of the role of the tax policy and tax administrations, because there were a number of emergency measures that were put out as policy and then delivered by tax administrations, I would say, very effectively around the globe. So we had different types of emergency measures like deferral, accelerated refunds, loss carryback provisions, temporary VAT tax reductions for smaller firms in certain industries, deferrals in payments, estimated payments, those kinds of things. And that was all very important to help keep businesses and households afloat in the early days of the pandemic. Some of those measures are continuing, some are now being phased out. It depends on where countries are. There were a number of recovery-oriented stimulus measures that have now been introduced, like tax incentives for investment and employment, reduced corporate income tax rates, lower property transaction taxes. And then we've also seen some countries have sought to try to consolidate their fiscal positions by increasing rates for the top personal income tax, the top wealth brackets for businesses, property taxes, and health and excise duties. But the measures that have been taken in this front have been relatively modest so far, as countries don't want to put economic recovery at risk. And, we keep going on this roller coaster of thinking the pandemic is ebbing, and as you could see in the U.S., it's on the rise again. So it is a very challenging situation for both policymakers and the tax administrations that have to administer these ever changing rules. In addition, since the onset of the crisis, several economies have started strengthening their carbon prices. So, for example, rising permit prices in the European ETS, commitments to a rising price trajectory in Canada, new carbon prices beyond EU ETS sectors in Germany. In Finland, for example, there's a phasing out of some fuel tax exemptions, also while reducing electricity taxes. There are tax increases on plastic, chemicals, and waste in some other countries. And all of these things are really designed to do two things. One, they help raise revenue, but on the other hand, they also help address the big challenge we are all facing, climate change, and how to address that and how to meet the Paris climate commitment. So environmental taxation, we think, could play a critical role in the post-COVID recovery and in adaptation and mitigation efforts. So, this is an area where maybe targeted tax incentives for promising clean technologies could help stimulate investment and help accelerate transition to a carbon neutral economy. It's important in this context, though, to consider a whole of system approach. Tax policy is one lever, but there are obviously other levers as well to try to address the climate situation. So we think that, with targeted measures, this will help address this issue.
Great, thank you so much. And now, before I go to Reinhard, I just want to remind the audience, if you have any questions, please send them in through Slido, and a tweet if you can. I cannot tweet myself while I do this, so if you use hashtag public trust in tax as the hashtag, that would be excellent. And we'll get the conversation going on social media, even though it's not very, very trusted. All right, so I would like to turn the floor over now to Reinhard Biebel. Reinhard, your thoughts on the survey and the issue of public trust in tax.
Yeah, thank you very much, Stephanie. Thanks to ACCA for the invitation, and also congratulations to ACA, CA, and IFAC for this excellent piece of work. It reveals that there are good things happening, but there is still need for action in many respects, and that is what we as the Commission have basically expected. We are talking about a tax system that raises public interest. I think there is no doubt public interest is there, and that builds very much on trust by taxpayers, by citizens overall. We have seen a number of scandals in the past, and I don't want to mention them. We all know what we're talking about, but scandals destroy trust in the system. That's for sure. At the same time, and I'm not wishing for more scandals, at the same time, there's also the positive element that scandals result in new action. We have seen that here on our side. We have done a lot over the past years together with EU member states, and that was a good thing. Hopefully we don't need scandals in order to take further actions. Coming back to the key element of public trust, and I'm very much convinced that this is very crucial here. It has been mentioned that trust needs to be established in different ways. Means that there needs to be, for example, trust between the tax administrations. And this is something which we see here and there at the European level. We are not there yet, that there is full trust between the different administrations. And if we were there, it would make life easier in terms of cooperation, in terms of enforcement, etc. So we are working on that. And then there also needs to be more trust between tax administrations and taxpayers. It has been mentioned before. There needs to be a slightly different relationship, we believe. The OECD has been working on a project called ICAP. We are building on that at the EU level. We call it cooperative compliance. We also expanded to the small and medium-sized entities because we believe it's important that there is a new way of working together between taxpayers and tax authorities. Next to the trust, and I feel like many concepts that we are discussing are very much interrelated. Next to the trust, I would like to touch upon fairness. In order to increase trust in the system, you need to ensure fairness, as Paul said at the beginning. Now we can discuss for long what we mean by fairness, what is fair. I think it's more like a feeling that we get, and I think we have developed a very good feeling over the past years. What is unfair? Just to give an example, if a multinational can put in place certain schemes or transactions that result in tax benefits that smaller taxpayers cannot for various reasons, that is something that is unfair. Or if certain players get hold of information that others do not, that is unfair as well. And something needs to be done there, and we work on that in the context of fighting tax avoidance and to some extent also evasion, building on what the OECD has done. A lot has happened at the EU level. I just mentioned the transposition of BEPS, the ATAD 1 and ATAD 2, anti-tax avoidance directives, which nobody had expected before that this would ever be adopted. A big success in terms of fighting these phenomena. And the current work of the OECD on Pillar 1, Pillar 2 also contribute to overall and global fairness. And in that respect, let me stress that international cooperation is crucial, but it's also happening. We see it at the EU level, we see it at the international level. and the Commission is a full supporter of the OECD work on this Pillar 1 and Pillar 2 project, because we see that a global solution is definitely needed. Moving on from fairness to transparency as another ingredient to build trust. We have done a lot in the past with our initiatives to exchange information between tax authorities. I fully believe that transparency is a crucial ingredient to building trust. And with transparency, we mainly focus at exchange of information between those that have to ensure the taxation, but also with a wider public. And the public CBCR project that has been adopted mid this year by the legislators is a good example for that. So a lot has happened. That doesn't mean that everything is perfect. We are still looking at it, working at it, improving the system, and foremost, making sure that the information that is getting transparent is also used in the right way by the different players. We believe that is crucial. Another element to building trust is the enforcement side. It has also been mentioned by Grace. I think enforcement is crucial. If taxpayers see and citizens see that enforcement varies between different countries, that creates incentives that we don't want. And therefore, we need to work with the tax administrations in order to make sure that they have the necessary resources that they need in order to enforce existing law. Digitalization plays a big role there. It leads to more service, but also to more efficiency. One thing that I would also like to mention as a contributor to building trust is less complexity. I struggle a bit with it because we are not a good example for coming up with less complicated legislation. And I think the OECD is also struggling to some extent, just because the reality is not simple. So in order to regulate, you probably need to come up with something that reflects to some extent the complexity of the real world. But nevertheless, we should never forget about keeping things simple is something that results in trust and fairness. On the sustainability, yes, the drive towards green initiatives and digitalization is something we have to focus on very much. And the pandemic has shown that our tax systems are not yet sustainable. What I would add to that as an additional thought is we should also not forget about the right tax mix for the future. It may be the case that types of taxes that we are used to and that we are still counting on may dry out in the future due to a change of behavior, due to change of regulation, greening, digitalization, etc. So that we need to keep in mind that we may probably test the mix of our taxes at a certain point in time. And to conclude, also to mention the incentives element, I think incentives are important in order to stimulate certain actions. But as mentioned, we need to be aware of the consequences, and they should not go in the wrong direction. Fair competition is something we have to keep in mind. Taxes play a good role in terms of changing behavior. We see that in the green taxation area. If well done, it can have the effect of people changing their behavior. We should, however, not forget about the fact that if it's a successful measure and the behavior has changed, the tax revenues will go down. So this is something for a short-term behavior change, but not for a long-term revenue stream. I leave it here to leave time for colleagues. I'm happy that questions will come up, and I'm happy to answer them.
Thanks so much, Reinhard. I actually do have a quick question from the audience. This might be an opportune time since you mentioned public CBCR. You know, one of the, as Helen mentioned earlier, you know, one of about the survey, in the survey, there was a bit of a decrease in support for public CBCR. And, you know, why do you think that is? Any thoughts on that?
Now, I mean, providing sensitive tax information or financial information to the public is something that raises concerns by some people. That's understandable. Therefore, we have to design these measures very carefully. Public CBCR is something that has been discussed for years now, and it exists already for some sectors since many years. For example, for the extractive industry, for the financial sector, it's already in place, and now it has been decided to extend it to other businesses as well. I think there is still a considerable interest around in the public to get hold of the information, because it's quite an effective tool to make some tests and plausibility checks. But we should leave it there, in my view. We should not use this information to go into detailed tax calculations and draw detailed conclusions. One element that we should not forget about is the deterrent effect that transparency has as well. It's difficult to measure, but those taxpayers that plan to enter into extremely aggressive schemes or constructions may think twice if they are aware of the fact that this information may become public one way or the other. So despite the slight decrease in interest, I believe it's still the right measure that has been taken.
Thanks so much for that. And just wanted to move on now to Chiara. What are your thoughts on the subject, please?
Yes, hello, and thank you very much for the invitation. Thanks also for the report and the survey that gives us the possibility to discuss a lot of aspects of the tax system. So we believe in Oxfam that the perception of fairness is probably what influences the most the trust in the tax system. If a tax system is perceived to be unfair, to favor the few at the expense of the many, the trust inevitably decreases. And this emerges from the survey. It shows that the lowest level of trust is in business leaders and politicians. Despite what has been said before, it increased from the previous survey. And in addition to that, the multinationals were the most likely to face this trust around their contribution to the tax revenues, while a number of respondents indicated that they consider the tax burden on the lowest wealth group to be too high. So this inequality in the tax system is not just a perception of the respondent, but we believe that it's the reality. We estimated that between 2007 and 2017, the revenue from corporate income tax and wealth taxes relative to the GDP decreased, while on the other side, revenue on payroll taxes, personal income taxes, and taxes on goods and services increased. In other words, the tax contribution of companies and the wealthiest individual relative to the GDP decreased, while workers and consumers were asked to contribute more. So the results of this is a more regressive tax system and a more unequal society, and this for sure does not help the trust in the tax system. It's still good that the trust in overall is increasing, but if we don't want this trend to reverse, it is important that we take fairness into consideration in the challenges that we are facing today, that are the recovery and the climate change. the wealth concerning the recovery, the wealth of the richest and the profit of the big corporation has significantly increased during the pandemic. And just to give an idea, the world's millionaires have seen their collective net worth increasing by 69% since the start of the pandemic. And companies like Moderna and biotech recorded 69% of profit margins on the vaccine. This has to come to an end, and the recovery has to be paid with higher contribution from the wealthiest individual and from the most profitable companies. And the second challenge is the climate change. We know from the experience of the Gilets jaunes that the environmental taxes can be regressive, so they can impact poorest people the most. And this is the case mainly of consumption environmental taxes like a carbon tax. It is therefore important to invest more on progressive environmental taxes, if possible, or apply compensation measures for the most vulnerable, if they are most effective by this measure. And in addition to fairness, if you want connected to fairness, there are other two important factors that I would like to mention, that are transparency and the quality of public spending. Transparency, as it has been mentioned before me, is vital for the accountability of the tax system and to build the trust of the citizens. It is important to share fairness, but also cases of unfairness, like a lot of times civil society organizations do. And it's also useful to build a clear bridge on the spending side, or how resources are spent. And this is my last point. The fact that revenue are spent properly, and in particular for public services like health, education, social protection, can increase the trust of people. Probably the fact that the states invested significant amount of resources to face the pandemic contributed in increases the public trust in the tax system, even if we know that there are several differences among the countries, also among the G20 countries. It is essential now to show that for further increase the trust in the tax system, we have to show that the recovery will be fair, funded by a more progressive tax system, and focus on strengthening public services like the health sector, and also focused on promoting the green transition. So fairness, transparency, and how resources are spent, we think that are the key ingredients for the public trust in the tax system. And I would stop here for the moment.
Okay. Thanks very much, Chiara. One additional follow-up question for you. What does Oxfam think about tax incentives and the overall positive answer in that survey about corporate tax incentives to attract multinational businesses?
Yeah, this is indeed an interesting result of the survey that has been already mentioned before me. So first of all, I would like to, we don't have to forget that tax incentives are tax expenditures, because they involve a reduction in tax revenue. So probably if the questions would have used this term tax expenditure, maybe the answer could have been different. Tax incentive is a revenue that the state decides to not collect to mainly incentivize certain sectors. So it's a mixed revenue, and as such, it needs to be justifiable and not harmful. A tax incentive can be justified if the economic, social, environmental benefits that it brings outweigh the cost that they generate in terms of missed revenue, but also in terms of efficiency, quality, and transparency. For example, we estimated that in Latin America, business tax incentive cost on average 9% of the total tax revenue, or 13% of public spending on health, education, and social protection. And at the same time, the effectiveness of these business tax incentives are highly questionable, mainly because most part of them are not related to the amount that is invested. And moreover, the tax incentive can generate a race to the bottom in the effective corporate tax rate. For example, in Indonesia, that's also figures in the survey. Indonesia is one of the countries in the ASEAN region that provides more tax incentives, and this has an effective, this has a result on the effective tax rate that's because of tax incentive is lower by 11%. This has also caused an aggressive tax on competition in the ASEAN region with a decline in tax rate and the decline in resources for the government. What is missing, first of all, in the tax incentive is the transparency on the objective of them and of their effects. Sometimes we take for granted that they will bring benefits, but the high cost is not taken into account. Then we have also to consider, they conclude here, that there are other factors that can create investment, job creation, and economic growth, such as the quality of institution, infrastructure, economic, political, and social stability. So all these factors and all these aspects have to be taken into account to assess the tax incentive and decide whether they have to be introduced or not. Thanks.
Thanks very much. Albert, your thoughts on the topic?
Thanks, Stephanie. Can you hear me okay?
Yes. Great.
Thank you, and thank you for the organizers for asking me to participate in the session today. The survey covers a lot of ground on some very important issues, like trust is crucial in a proper functioning self-assessment taxing regime, as I think others have pointed out on the panel. Without trust, the system doesn't work. The public needs to have trust in the stakeholders, as was mentioned, and I think in particular, it needs to have confidence in the legislators, tax administrators, and the judicial system as well. I think it's a positive that the accounting profession, relatively speaking, did well in the survey, but it certainly demonstrates that overall more needs to be done to enhance the public trust. Public needs to have confidence in legislators that are elected in terms of the legislative measures that they introduce, confidence in the tax authorities who administer the law, and confidence in an independent judiciary to resolve disputes, which undoubtedly always arrive and that sometimes are unavoidable. I think the tax literacy is very important. The public needs to understand the tax laws and legislative proposals of political parties. Tax proposals tend to vary along political lines, and the public needs to understand the options in this area so that they can make informed decisions when voting. Tax policy is far from an exact science. There's choices that need to be made. It's a challenging area for legislators. Tax regimes are called upon to do many things and many objectives. They're there to collect tax as the primary objective, but they're also delivering benefits to individuals. They also promote competitiveness to increase investment and create jobs, as came out in the survey. It needs to be done smartly, but tax is a key economic lever, and countries do continue to use it in order to compete with each other. The tax regime is called upon to encourage certain sectors and behaviors and discourage other sectors and behaviors, and also to address climate change as part of that. So the nature of this inherently leads to complexity, and while complexity needs to be reduced where possible, it's not always possible. And given the choice between simplicity and achieving the desired policy objective, the desired policy objective will usually trump simplicity. The tax administrations likewise face a lot of challenges as they're called upon not only to collect tax, but also to administer benefit programs. This certainly became a priority for many tax administrations during COVID. They had to react, and they did react very quickly, very effectively. They worked very cooperatively, I would say, in many jurisdictions, if not most jurisdictions, with both the legislative side and with taxpayers as well, other stakeholders, to make all of that happen under emergency conditions. Also, as was alluded to, you need to have cooperation with other tax administrations. Programs like the ICAP program, which was mentioned, promote collaborative relationship with taxpayers, but also a collaborative relationship between tax administrations. And so programs like that, where we can achieve cooperation like that between jurisdictions are welcome. The BEPS project and directionally the Pillar 1, Pillar 2 project also demonstrate that while it's not easy with compromises, countries can cooperate in some very challenging areas. Efforts like this should be encouraged because coordinated approaches like that are far better than uncoordinated unilateral measures that result in increased complexity, uncertainty, double tax disputes, including trade disputes. All of this hampers or would tend to hamper cross-border trade, investment, and growth. So given the rebuilding that's required as a result of the pandemic, this is of particular importance now. And so the next big area where I think that type of consensus building is going to be needed is the environmental area, where right now there are divergent measures around the world, and that in itself could lead to trade disputes, which we don't need right now. Regarding environmental measures, I think that tax can be an effective tool in combating climate change, but I agree that it's not the only tool. It's one of the tools in the overall regulatory landscape to help address climate change. Interestingly, it can be both a carrot, and so for green type investments, green technologies, incentive type regimes, whether it's fast write-offs or credits or whatever to encourage investments in that space or purchases in that space, that's part of it. But there's a stick part of it as well, whether it's carbon taxes or plastic taxes or other measures. And so tax can play a role on both sides of that, and I think an effective role on both sides of it. On the transparency front, I think the ESG initiative that's being led by IFAC, the IFRS foundations, and others around ESG reporting is very welcome. I think a common approach will improve comparability, add an assurance aspect to it, and reduced compliance costs. Overall, I think that part of enhancing the public trust in the system is trying to better inform the public on some of the complexities and trade-offs in the system, so that members of the public are better informed and therefore can make better decisions, and hopefully have more trust in the system as a result of being better informed about how it works. Back to you, Stephanie.
Thanks a lot, Albert. I do have a follow-up question for you, but I do know that Paul needs to leave fairly soon. So, Paul, I just wanted to get your reaction to some of these presentations that our panelists have given. What do you think?
Well, thank you. What I find very interesting in what we do when we hear the word trust is that we try to break it down, and I think that's very useful, right? So I hear the fairness comes back, transparency, but also, and I think Chiara put that very in the minds of people, taxation and revenue are related. So what do I pay taxes for? And that makes but it's helpful for our discussions. I was just looking, browsing also again through the report, for example. I find it very interesting that the trust in politicians is the highest in China, which brings me back to expectations. Okay, in a sense it could be true, right? China economy has been growing, and welfare is on the rise. So there's output legitimacy of any Chinese government, but on the input legitimacy, of course, is horrible. I would detest that. So what we try to do in this session is also to break down and see what is crucial for trust. And what I find very striking, of course, that everyone agrees that trust is so crucial. This is why the survey is very welcome, and this discussion is also. Without trust, the tax systems would break down.
Agree. Yes. When I first started this job, I didn't understand what tax sovereignty meant. Then I realized that sovereignty is really embedded in the trust that the public has in the system. So, and that's why countries are sovereign. So thank you so much for your reaction to that. And I'm sorry if you do have to go. I totally understand. Thank you so much for everything and for participating in this panel. So Albert, I just want to go back to you. What specifically what are some measures that can enhance trust in the tax system, in your opinion? Probably a hard question to answer, but
So I don't think there's a magic, unique solution to enhancing trust. I outlined in my opening remarks, some of the potential areas of focus and some of the challenges that are there as well. But some of the areas of focus would include clarity of laws, regulations, and treaties. Ambiguity leads to uncertainty, complexity, and disputes. And so some of which is unavoidable, but improving clarity where possible, reducing complexity where possible, I think would enhance trust. Effective and efficient dispute resolution mechanisms between taxpayers and between tax administrations, I think also would help to enhance trust. Some disputes are unavoidable, and having effective measures or procedures, processes available to help resolve them, I think would also help. Effective and efficient, as I mentioned before, judicial regimes to resolve disputes that can't otherwise be resolved. Like certainly if court processes take many years to resolve disputes, I don't think that helps it enhances anyone's trust in the system. Also, well-resourced tax administrations to encourage compliance and enforce the law in a consistent manner, I think, is also important in terms of enhancing trust. A well-resourced tax administration is good for business and it's good for the public and helps to enhance confidence. So no unique magic solution, but a lot of areas for improvement, which if addressed, I think would help enhance trust.
Thanks a lot for that. All right, so let's maybe everyone can regroup now and we can all just have a little discussion here. I have a couple of questions to kick us off here of my own. So on international cooperation, some of you have touched on this already, but how has the work on the solution to address the tax challenges of digitalization of the economy, how has that tested the limits of public trust in the tax system, and how has it pushed the limits of trust between stakeholders involved in a debate? And for Grace, I have to ask, what is the status of that project at the moment? I guess we can.
Right.
If anyone wants to go ahead, I don't know, Grace, maybe you take it away.
Maybe I should start. I hope you can hear me. My internet connection is not great. Yeah, on the project, well, I can say that, in the lead up to October, we have the G20 meeting where we promised to deliver the final results and an implementation plan for this two-pillar solution. You can imagine that we are working night and day, are trying to see what compromises can be reached to reach a full agreement. You may recall that there were a number of points that were left to be defined in the July statement. We released most, probably the issue that countries focus most on is the July statement referred to at least 15%, and so that is one of the issues that is being debated. But there are a number of other issues, and all I can say really at this point is that all countries are actively engaged. I think there's tremendous political will to reach the final details ready for October.
Thanks so much. Does anyone want to weigh in on, I know that Albert, you've talked a little bit about the project itself and its bearing on public trust. Paul.
Indeed, sorry, I have to leave in a moment to catch a train. But let's face it, this was less than a year ago. We were not even sure where this project would go to. Right, we were waiting for the election in the US, and I'm very excited to see that we are within reach of an agreement. And I think this may not boost trust immediately, but I think it can help to restore trust. Because how often do we have international global agreement nowadays? The last one was, I think, Paris, and that's still up for grabs, I would say. So the fact that we are able to work globally together to make changes, even though they are imperfect, Yes, they are imperfect, but if they were able to make progress by global cooperation, is also setting the tune. I very much hope for further cooperation, which is very much needed. The public reaction, and this is also like to point out from the many questions I got from journalists and but also from the public, will it really work? So that's this way you see that the trust also come in. So people see that there's an agreement may come onto the table, but they are not sure, given all, and I think Reinhard also alluded to that, many scandals we had in the past, will it mean a significant break? So and there you see that transparency on what the agreement is, but also what the effects will be is also crucial to restore trust. Right? So that's without the transparency, you will have it's easy to disbelieve either by media or by public.
Thank you. I see, Reinhard, you're nodding along. Would you like to weigh in?
No, I just want to agree with what Paul said, that international coordination and cooperation is happening. To give you an example from the European level, which is also an international level to some extent, we managed to adopt between 10 and 15 EU directives over the past 5 years. This under the premise that we need unanimity among the 27, at the time 28 member states. This shows that there is a trend towards international cooperation. Of course, the OECD project with around 140 jurisdictions is a different scale, but also there you see that countries talk to each other and pull in the same direction. The level is often in the detail, but still it's happening, and that's a good thing.
Okay, thank you so much. Chiara.
Yeah. Probably I will lower a bit the optimism in the air. So we think that for sure is an important step what is happening at the OECD level. But I'm afraid that the public trust, especially in developing countries, we are in contact with a lot of them, would not increase so much. And why is this the case? Because the most part of the revenues risk to go to the richest country. It has been estimated that the 60% of the revenue from the minimum tax, so the Pillar 2, will go to the G7 countries, while 38 developing countries would only collect less than 3% of the revenue generated by the tax. And this is a result of a negotiation process where the asks of developing country, for example, to have a higher tax rate or to give the rights to tax first to the source countries that are mainly developing countries. These asks were not so much taken into account. And we know that the G24, for example, sent a letter 1 or 2 days ago to highlight all their concerns about the current agreement. So a minimum tax can benefit developing country too, but to a less extent, and this would increase the inequality gap between the richest and the poorest countries. And then just to conclude, we also have a concern regarding the ambition. We would have liked a higher tax rate at 25%, that we think that this could really disincentivize tax avoidance and the race to the bottom. Thanks.
All right. Does anyone else have anything to add? Yes, Grace, would you like to respond?
Yeah, no, I just wanted to comment briefly on what Chiara just said. The two-pillar project is intended to benefit all countries, but the economic circumstances and the economic actors in different countries are different. So if you look at the Pillar 2, the minimum tax, it is a minimum tax on multinationals that are larger than 750 million. And so the tax is, to me, it's fairly obvious that there will be more going to the countries where those multinationals are headquartered, but that is not to say that developing countries are not benefiting from this. As Paul said at the beginning, he gave several examples of multinationals paying, you know, zero or close to zero on their revenues. And so this is a step forward. It could be better, yes. We could always aim for something higher, but if we look at what we are getting, and we're not just talking about 15% as a headline rate, but rather an effective tax rate. And so I think we will see all countries benefit from these measures. And the impact assessments that we have done have confirmed that. Obviously, we have to update those with the final figures that we hope to be agreed in the coming weeks.
Thanks so much for that. All right, I do have another question for you all. Now moving on to another area of the survey on tax incentives, which has come up several times during the panel already. So, you know, one interesting finding in the survey is that the public generally supports the use of tax incentives to attract international business, yet there is this distrust of MNEs and the amount of tax they pay in some countries. You know, what is causing this tension and why? You know, what is the future of tax incentives in a world economy that continues to face challenges related to COVID-19 and also faces the potential global corporate tax system overhaul under the pillars 1 and 2? Anybody want to tackle that meaty question?
On the incentives piece, Stephanie, I'm not surprised to see that there is support for the incentives, but I do think the incentives, and they have to be done smartly by jurisdictions. It is somewhat eye of the beholder, where people in one country, if they see incentives that are working in their jurisdiction, and you have to again assess whether it's actually working or not. But if they perceive at least that it's attracting jobs, it's creating jobs and investment, or helping keep businesses in that jurisdiction, I think folks in that jurisdiction think that that's a positive and that should be encouraged. They might not think that about the incentives in another jurisdiction. So if there's a perception in other jurisdictions that they have incentives, then those same local people who might enjoy their own incentives may not have that same view about incentives elsewhere. So there is, I think, an eye of the beholder part of it. Surveys are always difficult because you never know exactly what's on people's mind when they're responding to it. But the fact that folks are supportive of incentives doesn't surprise me, in that if there is that perception and perhaps reality that it's creating jobs and investment in that jurisdiction, then it doesn't surprise me that they would support them.
And Paul, thank you.
Yeah, I think what I find is that there's sometimes confusion in the debate on tax avoidance, where you see that people seem to think that the current tax system indeed provides an incentive to invest, whereas I think they invite mainly to initiate constructions to avoid taxation, which is more investment on paper aimed to avoid taxation. But taking that, if you try to, and I always try to, in the debate, I try to disentangle the two between the real investment that brings jobs and, let's say, I think the IMF has once called it fake investment that are intended to avoid tax. I try to disentangle that, but you can also find that people are sort of friendly, warm to those incentives that help to raise investment. And if you look at, let's say, and Chiara was very right to point out the developing countries, but if you look now, where state we're in also after the COVID in many of the Western the developed economies, there's a lack of private investment, and that's really concerning me. And whereas we know that we need much more investment, especially to make our economies more sustainable, this I hope will very much partly be driven by an agenda of public investment. But it's still a concern for me that the low interest rate area we're in is also reflecting very much the lack of private investment. So that is also a cause of concern. So even I would like to have a fair tax system, but making sure that the companies invest and innovate, that's very welcome, especially in the years after COVID.
Thanks very much for that. Now, if anyone doesn't have any else to weigh in on, I will turn now to some audience questions. Let's see, we've got lots of questions, so I will do my best to get to all of them in order. So one of them is very specific. One of the first ones we got was, do you think IAS 12 will change with the context of digitization? Does anyone want to tackle that one? I am not sure. That might be very specific. Oh, thank you very much, Paul. Bye. I think we have maybe no answers for that one. That's a pretty technical one. All right, let's see. Let's go to the next one. Do you think that there is a chance that EU member states skeptical of public CBCR might still challenge the legal base in the EU Court of Justice? That might be one for Reinhard.
Yeah, short answer to that. There has been a debate at the council level whether the Commission proposal is based on the correct legal base. By the way, it's not a tax proposal. It is a proposal by our financial market regulating DG, FISMA. Of course, we are fully convinced that it is the right legal base. It has now been negotiated and agreed between the EU legislators, still based on the same article. Now, if somebody believes that this is a wrong decision, a wrong approach, of course, there is a way to challenge it, but then we are pretty confident that the relevant court will consider the arguments that we believe are the right ones. So let's see.
Okay, next question. We have about 5 minutes, so I will try to keep it short here. One big one for everybody. How really effective, sustainable, and fair can global systems be as long as offshores continue to exist? Anybody want to?
Well, maybe I can start, Stephanie, since the OECD has been trying to tackle this issue on a number of fronts. As I think many of you know, that we started years ago trying to tackle the issue of bank secrecy and transparency around the globe, but obviously this was a particular issue in offshore jurisdictions that were selling secrecy to attract tax evaders, avoiders. And so through our work and now through the Global Forum that we established in 2009, we have basically all international financial centers participating in this work, having committed to eliminate bank secrecy, to engage in automatic exchange of financial information, to improve beneficial ownership information and exchange of that information as well. So I think we have gone a long way to dealing with the issues of lack of transparency, lack of sharing of information, because in this borderless world, it is not enough for any country to be able to have the best information available domestically. They need to be able to get information from other countries and jurisdictions. And so given the sovereign rights of countries over their territories, they can't just run across the border or fly into a country to try and get information. You need these exchange of information relationships. And I think we have done a great job in getting countries to implement those international standards. And we have seen that, you know, there have been very positive results from that. We have already 100 countries sharing information automatically, a total of 109 billion euros of additional revenues have been identified as a result of voluntary disclosure programs, similar initiatives that were established precisely to help tax evaders come clean before the automatic exchange was taking place. And so we think this has been very important. Now that's really focusing more on the tax evasion side and individuals, but of course it applies more generally. But then the BEPS project, which was aimed at dealing with base erosion and profit shifting, and this is also, you know, what our Pillar 2 is trying to do, is try to act as a backstop to all those measures that we established in the BEPS project to reduce artificial shifting of profits that should have been declared in a residence country or another country where there's a permanent establishment, that have been shifted to low or no tax jurisdictions to escape taxation. And so that's why, you know, those measures we think were very important, but now the minimum tax will act as a backstop to that, to ensure that no matter what tax planning arrangements are conjured up, that still a multinational will pay a minimum level of effective tax.
Thanks very much, Grace. I would love to keep going. We could talk all day about all this, but we do have to wrap things up right now. So I really appreciate everybody's comments and everyone's willingness to answer questions and your great insights. So, you know, as everyone's indicated, change is coming. We got to keep working and keep working our own respective roles to keep public trust in the tax system strong. So thank you again to my panelists, and thank you to the organizers for the honor of moderating this panel. I now will introduce a video. Now we have a video here from Ainsley van Onselen. She is the CEO of Chartered Accountants Australia and New Zealand. Given the time difference, you know, and naturally we will have her speak in a video. So take it away, Cecile. Thanks so much.
Hello, everyone, or kia ora koutou, which is hello to everyone in the language of the Maori, New Zealand's Indigenous community. I'm Ainsley van Onselen, CEO of Chartered Accountants Australia and New Zealand. It is my honour to be able to address you along with Helen Brand, Kevin Dancy, and our panellists to launch our third Public Trust in Tax Global Survey. Before I begin, I'd like to acknowledge the traditional custodians of all the lands on which we are meeting today and pay my respect to their elders, past, present, and emerging. Whilst we have heard from others today about the detailed findings, I'd like to take a moment to explain why Chartered Accountants ANZ rates this survey so highly. Most of you may have heard the quote attributed to the famous US jurist Oliver Wendell Holmes that taxes are what we pay for a civilized society. That quote is more important than ever at a time when the COVID pandemic is impacting the world, disrupting the lives of citizens, and threatening the viability of many businesses. We've seen governments respond with massive levels of safety net support and fiscal stimulus. Helped by record low interest rates, government debt has increased to unprecedented levels. Few dispute the social and economic need for this, but most in our communities, especially accountants, know that once high vaccination rates helps us to the other side of this pandemic, governments will need to address budget repair and debt repayment. So when I read this remarkable piece of research that is our Public Trust in Tax report, I asked myself, are our political leaders ready to make hard tax and spending decisions? Are each country's tax systems ready for change? Are we, as accountants and leading citizens, prepared to lead the debate about tax reform. And even once we've hopefully put this pandemic behind us, there's still plenty on the horizon. Take climate change. The G20 recently decided to accelerate action to limit the rise of global temperatures during the critical decade of the 2020s. You could ask, what's that got to do with tax? Well, some countries have already flagged using taxes in the form of tariffs to help reduce global emissions. On the flip side, governments will need funds to help transition workers and businesses adversely impacted by climate change policies. Also on the horizon is the rapidly evolving OECD project, backed by 132 countries, to establish a 15% minimum global tax rate and an equitable allocation of taxing rights on multinational taxpayers. This group is singled out for special mention in the survey. Who will provide the foundation for this new way of calculating the taxes multinationals pay? The global accounting profession. And if all that doesn't sound challenging enough, don't forget the growing cost of all of those everyday traditional government services many have come to expect and perhaps take for granted. Paying for those services is no longer an issue on the horizon, it's here and now. To take just one example, rising old age dependency ratios is placing more and more stress on the financing of public pensions, health, and long-term care. I could go on, but I think you know where I'm heading. The tax challenges ahead are enormous. As the survey indicates, leadership at all levels is required, whether that be our politicians to impose and spend taxes wisely, by our tax regulators to always strive to earn the community's confidence, by businesses large and small to support the communities from which they seek to profit, and finally, and most importantly, by all of us as citizens to honestly calculate and pay the tax we owe. That's why I think the public trust in tax survey is particularly significant. And in case you think I've overlooked the elephant in the room, yes, I know few of us enjoy paying taxes. Even the Australian Tax Commissioner likens it to going to the dentist. And yes, I acknowledge that accountants help clients with tax planning. They grapple constantly with the often complex legislation to identify the line between legitimate strategies and arrangements that push the envelope. My point is that it's important to focus on the big picture. Well-functioning tax systems and high levels of taxpayer trust and confidence are vital, especially in challenging times when tough decisions are necessary. So let me finish by saying how proud I am to lead a professional association that represents many of the leading, most highly trusted accounting and tax professionals in our region. A member once told me that this is the profession's finest hour. And I continue to hear many stories of members making a difference, saving livelihoods and businesses. Given all I've just said, Helen, Kevin, and I know accountants will continue to be under enormous pressure to keep the badge shiny. Accountants will continue to need guidance and support along the way from their professional associations, not just with training and professional development, but in setting clear standards for ethical behaviour. So let me assure you that CAANZ, ACCA, and IFAC will continue
can you all hear me?
ways to
just
collaborate,
really quickly.
not only to get the best outcomes for stakeholders.
Okay, excellent. Thank you so much,
system,
Kevin. Thank you so much for that video. Wanted to introduce Kevin Dancy, CEO of IFAC, for some closing remarks. Kevin, the floor is yours.
Thanks, Stephanie. And to all, thank you for participating today. And I just want to check, can everybody hear me okay? Great, super, thank you. And a big thank you to Paul, our keynote speaker today, our panelists, Grace, Reinhard, Jara, and Albert, and of course to you, Stephanie, for moderating this session. Your insights and experiences provided an engaging discussion that will inspire others and help the accountancy profession to continue to play its key role enhancing the effectiveness, sustainability, and fairness of the global tax system. A few final comments from me, and I really come at this issue having played various roles in the tax area for almost the last 50 years, as a tax practitioner, tax partner, as the leader of PwC Canada's national tax practice, as the CEO of PwC Canada, as the most senior official in the Canadian government in charge of tax policy, as CEO of CPA Canada, the Canadian Professional Accounting Organization, and now CEO of IFAC. So I've spent almost 50 years either designing, drafting, interpreting, advising on, or applying tax policy and tax legislation. And I think that's helpful because it allows me to look at this issue from many different perspectives. Now, the operative word that we've been dealing with today is trust. And as you know, it takes a long time to build up, but you can lose it in a heartbeat. And it takes a lot of stakeholders working together to build it and get it right. So enhancing trust is hard, no doubt about it. Clearly at IFAC, we are pleased to see the survey results that professional accountants are the most trusted participant in the tax system. And we will continue to strive to increase this perception even more by adopting and supporting the adoption and implementation of the ethics code developed by the International Ethics Standards Board. Second, by continuing to issue guidance, as we did in 2019, to help professional accountants understand their obligations under the code and navigate their way in providing tax advice, a very topical issue today. Third, we believe this code is a key reason why professional accountants are the most highly trusted segment, and it distinguishes us from other so-called gatekeepers in the system. As Grace mentioned, partnership with our profession will be to everyone's benefit, and it gets to the core of the profession's public interest mandate. And we'll also continue to conduct surveys like the one we're talking about today to continue to provide insights and data points to build on. Finally, a few observations, and these are personal observations on the global system and way forward for tax policy and how to build trust. I think the collaboration in the last year and the multilateral approach, Pillar 1 and 2, the work of the OECD is encouraging. Many of these issues can only be solved this way. We need to ensure there's no gaps and also no double taxation. But we can't be naive. I think we all have to accept that countries will continue to use tax policy as an economic lever to attract business and compete with other countries. That's just the reality of the world in the past, today, and I believe it will be the reality going forward. We're still a world of nation states. And that competition, it could be on relatively new issues like the taxation of the digital economy, or issues that have been around much longer. I think it's also important to keep in mind that good policy, or good tax policy, and good economic policy are not the same thing. Tax policy is a political decision, and political decisions involve many factors besides economic ones. I think a classic case in point is the political decision to increase taxes on corporations and reduce the tax on individuals. Often that's a good political decision. I've been in those rooms many, many times. But economic theory would tell us that only real people bear the tax burden. Corporations are artificial entities. So tax is just another cost of doing business. And they push that tax on, and they push that cost onto increasing their prices. They push it back onto the cost of capital, or they push it back onto labor. And most economic theories will show that the tax burden from corporate taxes is borne by labor. They just don't know it. Which leads to the next point, the complexity of tax laws and individuals' lack of understanding of the way the system works. I think, look at coordination and cooperation can help authorities reduce loopholes and make better, simpler, more harmonized tax codes. But overall, I doubt this will ever be resolved. And this lack of understanding leads to concerns and cynicism amongst the public. And the public will judge their tax systems by their personal perceptions of equity and inclusiveness, their personal perceptions or feelings of fairness, just as you would expect them to do. Unfortunately, some of these perceptions may be ill-informed. Again, that's just the world we live in. Now, you may think the last couple of comments I've made sound pretty depressing, but I think there's a number of things that we can build on to build trust. And I'm going to name 6. And as Albert said, I don't think there's a magic bullet here, but I think there's a framework of things where we can enhance and build trust in the global tax system. I think, first of all, continued multilateral collaboration. And frankly, let's get as much as possible in this world of nation states. This is all the more urgent with the need to plan for how ESG factors will influence the debate in the medium term. Tax systems will have to reckon with climate change to be resilient and responsive to stakeholders. Second issue is to build around the transparency concept. And this is more than companies reporting their country by country taxes. Yes, that's a nice step, but that in and of itself is not enough in the transparency area. I think we just all have to acknowledge and realize, and I can do this because I've played on every side of this tax game or tax area throughout my career, is that tax authorities will always be playing catch up. That's just the reality. There's an asymmetry between tax advisors and tax authorities. And we can't have a system where taxpayers believe they can rely on the audit lottery in terms of being successful. I think that's going to drive more transparency around what some might perceive as aggressive tax avoidance schemes. I think that's the only way to address that issue and address the asymmetry. Just want to focus more on the enhanced relationships. And this has been talked about a bit today. I think it's enhanced relationships between tax authorities, taxpayers, and tax practitioners or advisors. And we really need a constructive working relationship between those three. And that constructive working relationship needs to be conveyed to the public. Because I think the nature of that relationship will affect the public's mood and perception of the tax system and their views of fairness and tax morale. I think another aspect is really the role of corporate boards going forward. I think I've been in boardrooms for many, many years, and the issues of the company's tax risk, its tax profile, its tax reputation, and how that affects what a corporation will or will not do is different today than it was 25 years ago. And I think it's a positive change. I think that's another area where we should continue to push to enhance the trust in the tax system is the whole area of the corporate good governance that is applied within entities around the world. I think a fifth issue is around just providing more data on the progressivity of the system and the share of tax burden by income level. The old adage, you can't track what you can't measure, or some version of that platitude is a good reminder. And this factual data should also help in informing the public about the fairness of the tax system. I'm not naive enough to think that taxpayers will ever fully understand the tax system. It is a very complex piece of law, and that's just not going to happen. But I think more data presented in the right way can help in terms of informing individuals and informing their views of the fairness of the system. And the final one I would look to is the issue of a digital economy. And more digital and less cash makes tracking income flows and compliance easier. So frankly, reducing the cash economy, reducing the underground economy is an important example of how digitalization can enhance compliance and build trust. Meanwhile, at IFAC and through PAOs like ACCA and Chartered Accountants Australia and New Zealand, we'll continue to do our part to enhance the effectiveness of the system and support professional accountants in their tax advisory roles. Professional accountancy organizations are key. They can set the direction and equip their members, whether they are in government, business, or public practice. They can support members, grounded in the profession's international code of ethics, in delivering their public interest mandate and doing the right thing. Now, this concludes our event for today. I'd like to thank everyone for their participation and enjoy the rest of the day. Thank you.